One of the companies in Farmers Group of Companies is Foremost, and Foremost specializes in rental properties. So we're here tonight to talk about insuring your rental properties and vacants and rehabs. So there are two main types of policies that we work with when we're talking about rentals, the HO1 and the HO3. Your HO1, also known as the Dwelling Fire 1, is your burn down, blow up type policy. It will, if your house blows up or burns down, I'll go over different perils, we'll go ahead and replace it. So it's named peril policy only. And then we have a comprehensive policy, HO3, which is Dwelling Fire 3. And that's a policy that's going to return that home to its former glory. We're going to rebuild everything. One of the great things about Foremost is we have very broad underwriting. As you can see up here, there's no age requirements for the home. Some companies, if a home is 100 years old, they won't do it. Or if it's before 1900, they won't do it. Foremost don't care. No limit to the number of properties that you have. So if you have 30 rental properties and you have to put 10 with one company because they won't do more than that, 10 with another, we don't have that problem. We can do units up to 4 families. Once you go 5 units or above, as most of you guys know, you have to move to the commercial type insurance policies. We can also put these policies under LLCs, trusts, sole proprietorships. Even in the IRAs. One of the members here, we have an IRA that pays for the insurance. And another big thing is no fire protection class requirements. What that is depending upon where the home or rental is located, there's a fire protection code. It goes from 1 up to 9. And what determines that code is it a full-time fire department? Is it volunteer? Is there no fire department? Things of that nature. So they take into consideration how long it would take for a fire department to get there and prevent a fire, and then they rate you that way. So a lot of insurance companies, if it's above a fire protection code of 4, they won't touch it. We'll touch you all the way to a 9. You also have coverage, choice, and flexibility. You can do just a straight policy for just the dwelling cost. Whatever you paid for it, you just want that amount of money. Or you can add loss of rents coverage on there. Meaning if you have a loss, we'll pay you the money that you would get for rents while it's being rebuilt. Other structures, garages, personal property. If you guys have refrigerators, washer dryers, things of that nature, if you've got the house furnished, we can go ahead and cover that as well. And we can add replacement costs on it. The difference between actual cash value and replacement costs is just that. If you got a 1989 32-inch TV with tubes in it, we're going to replace it with a brand new TV with the replacement costs, like in modern. So some 32-inch TV. If you got an actual cash value policy, we're going to give you about $1,000 so that you can replace it and pay for the rest. So we're going to talk about the Dwelling Fire 1 policy first, the HO1. This is intended for properties that are marginal condition but maintained. You can take properties with loss issues. A lot of insurance companies, 2 or more losses, they won't touch it. We'll take up to 5 losses Foremost. And customers with credit issues. A huge advantage of Foremost is that we do vacant properties. Not many companies do. It's got to be a DP1, agreed value policy, but we will do any kind of vacant you have. We can do it from $25,000 up to $1 million of coverage. So we have all kinds of limits that we can use for the value of the property. You're going to need a vacant policy if you purchase a home without a current renter or a signed lease agreement. The policy will be converted to a landlord protector once renters move in or a signed lease agreement with occupancy in less than 30 days. So if you buy a property and you think you're going to have a renter, we can do it as a renter's policy. But if we get to day 59, we need to put that back to a vacant because there's no one in there. Vacant properties can have pools, but we're not going to write any liability coverage for that. It's a vacant property, there's no one there. You can have a pool there, that's fine, but that personal injury protection, that personal liability, that $100,000, $300,000, we're not going to deal with that. That's a policy. This is huge. Rehab